Good evening, everyone. Time for another silver update. This is the 8-hour chart of silver provided by netdania.com. You can click on the link below. Now you can see from this chart, this little line here, we're out of the gate strongly moving towards that $34 level. We almost hit that. I've drawn in a number of resistance lines here. You can see the first line here is kind of the top of the head and shoulders top. You've got the left and right shoulders here that form this line, and then this head top. The reason why I've drawn this line is because if we get through this line, the amount of resistance is much smaller than where we were here. There's really just this section and a little bit of this section. Otherwise, there really isn't anything. Now, once we get through that line, if we can break through this line here, then we're into just the bare head of this top, which is about almost a $2 move. And a move through that level is going to take us into this large resistance area where we had that consolidation up and down from the 44 level. So this is going to be our next area of large resistance. I'm projecting that we'll probably move very rapidly up through there. I don't think that the overbought situation has run its course. So as I said in the last few updates, a run from 32 to 34 to 36 could happen very rapidly, and that's still a possibility, especially with the action tonight. If we don't get follow-through selling tomorrow morning, then we could move up through 34 and very rapidly challenge this line, even possibly by tomorrow morning. Now let's get to the questions of the night. The first one is the euro being punished? This is from Blue Oz 62. Hi, Brother John. I've been educating myself about the petrodollar over the last 12 months, and I have found it highly interesting to learn that Iraq, Libya, Syria, and Iran were making plans to trade oil for gold and euros, therefore bypassing the US dollar. So my question is, Brother John, do you think the US is punishing the Eurozone for its currency involvement in those Middle East dealings by deliberately selling the tens of billions of dollars worth of toxic assets to them? Excellent question. Yes, I do think so. With a caveat, I would say that I believe that we're probably looking at a battle of factions. Now, the reason that I say that is because a lot of people have pointed out the Federal Reserve is a privately held corporation with many stockholders, and most of them being European banks. So a lot of people have talked about how the Europeans have been in charge, especially the British as well, have been in charge of what the Federal Reserve does. But then again, it appears that the actions of the United States government and the Federal Reserve are to prevent the Eurozone from emerging as a competing world currency, and if not a world currency, at least a competing reserve currency. I definitely believe that Leap 2020 is correct, and following the propaganda and spin coming out of the US and the World Bank, IMF, NATO, and other US-led quote-unquote international organizations, I think it is clearly the case that a faction in the United States is attempting to prevent the euro from emerging as a reserve currency status. Now, I think that it's probably a 50-50 guess on whether that can happen anyway, just because the Eurozone is so has so many problems, and there are so many socialist nations who just simply cannot or will not embrace a free market solution to their problems. So the structural problems with the Eurozone, and that includes the fact that interest rates are not uniform, politics are not uniform, and so the only thing really uniform is the currency and some trade rules. But other than that, the bond situation and the political situation in the Eurozone is so terrible that it may undermine the ability of the euro to become a competitor as a reserve currency for the US dollar. Now, I do believe that the Wall Street banks definitely were involved in undermining many European nations by selling them toxic debt. The Chinese have pretty much come out a number of times and openly accused Wall Street of fraud, which I don't think there's any question that Wall Street has committed fraud in these things. The Europeans have not been so bold, although some in the Communist Party and others have pretty much accused the United States of outright fraud in selling these toxic assets. So I would say that's a 50-50 toss-up. I can't say for sure, but there's definitely a faction in the United States that is attempting to prevent the euro from emerging as a competing reserve currency. Next question, hyperinflation of the world reserve currency. Hi, Brother John. Just a couple of quick questions. With the US dollar being the world reserve currency, what do you suppose might happen to world currencies if the US goes into hyperinflation? 2, what would be the effect of this be on gold and silver prices in countries other than the US? Thanking you in advance. Well, we've already kind of seen what has happened with the US dollar being the world reserve currency and other currencies following suit. So a big story that we saw was the pegging of the Swiss franc to the euro. There was a lot of safe haven buying. There was a flood of money into the Swiss franc, and the reaction of the Swiss government, which I've roundly criticized ever since they took that action, was to sell out their own people and peg their currency to a failing currency, the euro. And we've seen that around the world. We've seen the Chinese print. We see the Japanese central bank come out and print up a whole bunch of money whenever there's pressure on their currency if it's being accumulated. So we see this worldwide, that the Federal Reserve sort of begins the round of money printing, and then the other central banks, I won't say are forced to follow suit, but they do follow suit. I'm still waiting for one country, and that would really be all it would take, is for one country to break from the pack and make the decision to let their currency appreciate against the other currencies. The hit, of course, would be that initially their exports would suffer. I'm still expecting that country to be China. I think that once China has locked up as much gold as they think they can get their hands on without putting the price up on themselves, I think that China is probably going to make the move to convertibility and attempting to be the next world reserve currency and not following suit. If that were the case, you would see a tremendous amount of world capital flood into that currency. And that could be any currency. I've also suggested that Iceland do that by instituting some type of bimetallic backing of their currency. Really, any government in the world that had a stable political situation and instituted that would probably see economic boom like had never been seen before. Of course, they also might see U.S. warships parked outside of their waters. So on to the main topic of the night. That's going to be a couple of things. First, I want to address the inflation adjusted price of silver. We're seeing a lot of questions about how fast silver has run up and how high it can go. And I just wanted to introduce some of the fundamentals here to show you that the price is still ridiculously low as far as any historical basis. Now, the first calculation I did here, this is from the Minneapolis Fed, and you can go there, and this is their inflation calculator. What you do is you plug in a year into this box, you plug a price into this box, and then you plug in a year in this next box, and that will give the inflation adjusted price. So the first calculation I did was to take the current price, which is around $34 an ounce for silver, and plug that into the year 1979. Now, if you remember, during the bull spike of 1979 with the Hunt attempted corner, we ran to nearly $50, but we actually had a year or so where we traded around $35, so we're very close to that. So if we plug in that price of that time, we come with an inflation-adjusted price of about $109. So that's the inflation-adjusted price of silver at 1979, $34. That's not the high. If we pick the high and just say that it's 50, then if we revisit the inflation-adjusted high, that would take us to 160. So that's a long ways away from where we are. Now, the other calculation I want to do is to show you where silver really is at based upon the prices of that day. So if we took a price of about roughly $10, we'll do 10.5 and then calculate that. You can see we're at about 33.62. So right now we're at 33.86, so that's close enough. So the price that we're seeing in silver right now is as if silver were at about $10 back in 1979, which is nearly 1/5 of the high that it hit. So based on both of those scenarios, we can see that silver is still significantly underpriced based on the all-time high that it hit, also based on the nominal one-year high, and also based on an inflation adjustment for today's price. Now, again, this is the Fed's inflation adjustment calculator. This is based on the Fed's CPI index, or I think it's the Bureau of Economic Statistics, or the BLS, one of those. It's based on their CPI, and if you followed Shadow Stats or any of the others, you know that that's off by a significant factor. I've tried to calculate that, and you can't really do it with this calculator, but you could probably put in, say, 50 and roughly estimate add 10 years would be roughly make up for the false numbers coming out of the Fed. And if we did that, then you're looking at, well, they're not going to let us do that. So you'd have to put in a higher price here and say 100 and 1979 and then 2012 here. So this is all just a rough guesstimate, but that would be something like a Shadow Stats inflation would give you something north of $300 if we were looking at an all-time high for silver and some kind of true inflation statistics. We just don't know what those are, but I would tend to trust the Shadow Stats statistics more than I would trust the Fed's own statistics, who have a built-in incentive to underestimate inflation. Now finally, I want to look at the national debt clock. As you know, we're coming up to the fiscal cliff, and you can see that we just recently passed $16 trillion on the total debt, and we've rapidly gone past that. We're at an extra $14 billion. So just in a matter of days or weeks, we've added another $14 billion on to the national debt. You can see that it's not slowing at all. Now, an interesting comparison that we have here is the national debt time clock. I've pointed that out before, and I encourage you to just go and select some dates on the national debt time clock and do some comparisons. There's a couple of very strange anomalies that I wanted to point out when we look at this clock. First of all, this is the current clock at 2012. You can see we've got $16 trillion in national debt. We've got about a $1.2 trillion deficit, and we've got about $2.4 trillion in tax revenue. If we go back to the 2000 clock, you can see the national debt was around $5.6 trillion, but the tax revenue was really not a lot less than what we have now. It was about $2 trillion. and actually shows the federal budget surplus at that time, which of course there never really was. That's a deception. But anyway, you can see that the amount of tax revenue that we took in was not that much lower than what we're taking in now. Now, if we go to 2016, let's go back to 2012 and then jump ahead to 2016. You can see we go from 16 trillion on the national debt and 2.4 trillion in tax revenue, and in 2016 we get a projection of nearly 4 trillion in tax revenue, not a doubling but very close, and then 22 trillion, another 6 trillion added on to the national debt. Now, these numbers here of how the tax revenues increase are simply astounding. I don't know how they come up with these. Maybe it has to do with the rate that they're currently increasing, but I would venture to say that we're not going to get anywhere near $4 trillion in federal tax revenues. And if that's the case, they're projecting actually a lower deficit of $1 trillion. I would guess take $1 trillion off of here and you'll probably see a federal deficit of about $2 trillion, and that would be more accurate. But the other figure I wanted to look at here that's very interesting is the trade numbers. Now you can see here we're on the 2016 projection, and you can see that the trade numbers here, U.S. debt held by foreigners is estimated to be $10 trillion in 2016. If we go back to the year 2000, you can see that that figure is $1 trillion. So this figure in the space of 16 years has gone up tenfold. Now, if we go to the current time, you can see in 2012 we've got roughly $5 trillion in U.S. debt held by foreign countries. And again, to 2016, you can see that nearly doubles to about $10 trillion. So what they are projecting, and of course, if this projection doesn't come through, then something significant is going to have to change. And of course, that's going to be interest rates. And if interest rates rise dramatically, then this figure, the deficit figure, and the spending figure is going to rise dramatically. All these numbers will be changed. So the question is how can they project an increase of $5 trillion in U.S. debt held by foreigners, and just 4 years from now, that nearly doubling? Who are the foreigners who are going to buy another nearly $5 trillion in U.S. debt between now and 2016? That's a question I can't answer. And unless it's the Federal Reserve operating through proxies in the Cayman Islands, or perhaps pretending to be China, I can't tell you who that's going to be, unless there's QE 3, 4, 5, and 6, and somehow the Fed attributes that money being bought by foreigners. That's the only thing I can think of to account for these figures. So it's pretty clear when we look at 2016 figures that the revenues nearly doubling, the debt going up by $6 trillion, the federal spending hitting nearly $5 trillion, and the debt held by foreigners hitting nearly $10 trillion. If these are the numbers that we're going to see in 2016, I cannot see how we're going to make it there. There's going to be a collapse between now and then. These numbers just aren't sustainable, and they really, honestly, don't even make any sense when you do the comparison. So I encourage you to go ahead and grab all the clocks. You can get 2000, 2004, 2008, 2012, and 2016, and just do the comparisons line by line and look at the projections, and you'll see that there's a lot of places where the numbers just don't add up. So back to the silver chart, we're rallying in the overnight, we're rallying in Asia. It's quite possible with the strength that we're seeing that we could reach these two shoulders and penetrate them. If we do, we don't have a lot of resistance, we have some, but if we can get through it, then there's obviously smooth sailing right up to this 37.50 price, and then that's going to set us up to do a big test of this 38 to 44 resistance area, and we'll see how long it takes to get through that when we get there. And we'll talk to you next time.